Hello, and thank you for joining our webinar today. Appreciate you taking the time out of your day to take a look at what we're covering this afternoon. So we are going to be covering non-qualified stretch as well as qualified longevity annuity contracts, as well as inherited IRAs briefly. And what do those three things have in common? Well, it's all about reducing taxation or controlling the timing of taxation, with taxes being one of the major risks that retirees face within their retirement plan and journey. Being able to not eliminate, because unfortunately we can't always, taxation, but any way that we can control the way we distribute those hard-earned dollars to our heirs, that next generation, or to free up money for ourselves to reduce the taxation on the dollars we have, it can be a good thing. So today, to help us, I couldn't think of a better team to bring on. The Western and Southern Group Integrity Life's Kim Humbert is going to be speaking with me today here, and I'm going to get into that presentation with Kim very shortly. We're just going to go through some items here with IAMS before we get started. And welcome aboard if you are new with us. I'm going to list a couple items here that you'll want to take out a pen, note some items that you have interest in, and when we reach back around and do a follow-up with you, or if you reach out to the individual that you work with primarily on my team here at IAMS, your sales director, they'll have a checklist of things you want to look into and that you may have questions on, one of which being the new Producer Builders Program, all about growing your production here at IAMS and growing our relationship together. During your first 180 days with IAMS, if you're a new producer with us, we have what we call our Producer Builder Program. And during that 180 days, what we're going to do there is based off of your submitted premium at different levels, which you see here on the screen. We're going to offer you money back into your practice to fund the marketing methodology that got you to the premium in the first place. Imagine that, right? So partnership here on dollars. Also, we've got some cash, a little more of your choice, if you will. As an example, $100,000 in premium in your first 180 days could get you an iPad, could get you $750 in cash, or maybe you want to use that towards putting together or having us create a pre-formatted email campaign, do a customized marketing analysis, and put together a corporate identity package for your individual business with your logo, and help you shine out there like you do with your clients every day. These are options that are open to our new producers in your first 180 days, and we're also open to if you're working on a particular seminar or system that gets you in front of those individuals, we can work with you on the dollar amount to cover those expenses too, to help jumpstart your production with IAMS. Once you're with IAMS, and those of us on the call here who are licensed with us appreciate your business and your partnership. For years past, we have what we call our Business Builder Program. This is increasing your capital. So after your 180 days, if you are new with us, you have access to this as well. If you're licensed with IAMS now, you have access to this. And essentially, we have a couple different ways to increase your capital, one of which is Referred Producer Program. So much like you, we build our agent network here, folks that we work with and partner with, like yourself, through referrals. And we're going to pay you for those. If you have a referral, bring it to your marketer, your primary contact, or myself, Justin Ford, here at IAMS. And we're going to, one, reach out to that individual, set them up, get them all, take care of all the paperwork, and get them appointed and into the IAMS system. And that is going to generate a $50 one-time check written right to you that you'll get for that licensing that new agent. And in addition to that, any business they write for their longevity with IAMS and yours, we're going to pay you basis points on their production that come out of our pocket, not theirs. So that agent that you referred will get their commission, you'll get yours as normal, and from our pocket, we're going to pay you off of their production going forward as an appreciation for the referral. There's no limit on the number of referrals, so if you know people, get them in, and we'd be happy to take care of them if you believe they're a fit and if you like what we're doing here for you. We'd be happy to do that, and we'd love to get you some money in your pocket for helping us. In addition to that, when you do come on with us after your 180 days, we have our ongoing marketing reimbursement program, again, increasing your capital. We're going to pay $100 for marketing reimbursement per $100,000 of submitted and paid indexed annuity premium. Single premium life, you can see down at the bottom here, and I can email these out to everybody at the end of our call. It's $200 per $100,000 in single premium life premium. And also Target Life is going to be $200 per $10,000 of Target Life insurance premium for those of you out there writing IUL and maybe some whole life products. So that is an ongoing program that, again, those dollars do not expire. And if you'd like to inquire into the amount you have in your account currently, um, talk with your business development director here at IAMS. We'd be happy to help you out and help grow and increase your capital. Back office support, now we're interested in saving some time. So we know money is important. We know time oftentimes is the reason we have money. At least it is for me. It buys me the time for the things I want to do. And we're going to help you save time in the area of our back office support. One of the things IAMS is famous for is our service guarantee, not only answering the phone call. We don't carry voicemails here. We pick up a live person each time so that you can ask your questions and get what you need, saving time for you again. Back office support. It goes beyond just people help. We have some great processing teams here for new business on life insurance and annuities. In addition to that, case design assistance from my team here on the annuity and life teams, long-term care teams. But then also when we are not working, so when we are closed, giving some of our well-needed folks here some rest, you have access to our website. And on our website, you can now access any form at your fingertips. You can access your quotes or do term insurance, term insurance, guaranteed universal life quotes on our website, even final expense quotations. Annuities, now big topic right now. If we're not already seeing the interest rate environment change up, if you're not checking back with existing annuity owners or in your own book of business, even if those annuities that they own currently are only a year to 2 years old, we're finding that many of those clients are still finding a substantial benefit, whether that be an increase in their paycheck or a better interest rate or a product that's priced in a better environment by making a switch. And now as fiduciary, especially with qualified money, it's important that we take a look and make sure that if we do switch them to a product, it beats the benefits they could have gotten elsewhere. You can do that all on our website or with the help of your sales director and have access to all the material on every product via our website through Luma. And in addition to that, paperless contracting, etc. Again, on our website, I think I just skipped ahead here. We've got our online forums. In addition to that, we have what we call our sales resource library. These are producer solutions. It's essentially a module on our website called the Sales Resource Library that is like the Google for financial services. So this morning, as an example, I was looking up some items here for another agent in the area of systematic and equal payments and the 72T, and went out there and enjoyed typing that in, and it gave me a compliant, tax compliant, updated, I think a 6-7 page document going through everything you'd ever want to know about SEPPs and the 72T and Q. And I was able to put my logo and my name on it right from our website, and you can do the same. Everything from a buy-sell agreement all the way down to you name it. Net appreciated realization, anything you can think of, that's accessible to you on our site, as well as submitting your business, which we'll talk about here next. We use 3-4 different e-app solution programs. Luma is the general support system that will follow your products and allow you to select your product, whether that be a fixed annuity or a indexed annuity. Firelight is the application program that allows you to paper up those applications for annuities, fixed indexed annuities, and fixed. iPipeline, primarily used for our life insurance, and Sunfire as well. In addition to that, our creative services team, we have an in-house advertising agency that we built from the ground up. These are employees that are on Steve and IAMS and Curtis and Chris's payroll, our payroll. These are not consultants, if you will. And the benefit of that is they only work for you. They only work for financial services. They only work for IAMS agents. They understand the benefits and the marketing aspects and intricacies of positioning retirement income products that we work with. They may not know about offering other services like your local advertising team does, which is a good thing because you don't have to teach them how this industry works. Our staff here are trained to do that, and that involves everything from the most simplest logo design all the way through the most complex logo design, business cards, brochures, everything to include social media assistance, email marketing, online newsletters, you name it, we've got it. Maximizing your online presence, search engine optimization, as it's oftentimes called, all the way down to the ability to, say you got a layoff in your area, a company laying people off like John Deere, as an example, and you know about that coming up here because you spoke with your marketer as an example, and we've pulled that name out of the warn list, which is something we can do, companies in your area that may be letting people go. what we can do is we can canvas that area where those individuals in that particular company work and play online, and make sure that your advertisement is focused when they pull up any type of social media or what have you. It's called geofencing. That's another area that we work in, kind of a unique digital solution. These guys and gals on our creative team can do everything needed to make you shine as much as you do already with your clients. Turnkey solutions, handouts, flyers and brochures. Our sales kits we already have put together. If you are looking for a great presentation or information to be able to speak about a complex topic like long-term care planning, or like what we're talking about today, non-qualified stretch, let us know. Because if it's not in our sales kits, we have professional partnerships with teams as elite as the Integrity Group, which we'll be talking about here in a second with Kim, that we can get you material on. Creative services, tailor-made for you. So complementary marketing analysis. I'd say show of hands, but show of virtual hands. How many of us have put together a marketing plan or had someone do a full analysis of our marketing efforts in our practice? Oftentimes having a third party take a look at something can give you a different view, but many times we're working in the business and we don't have time to work on the business. And this is something that we offer up complimentary to you. We will put together a marketing analysis, an assessment of your current marketing activities, your branding, your digital online presence, and also make recommendations for your business. It can help you refine your target market, strengthen your brand, create or expand your footprint online, and improve your bottom line. That's what we're talking about here. Strengthen your brand, make sure your community knows you as we do, which is the professional you are helping people day to day. Just got to get your name out there, and that's what we're looking to do here in that. So if you do have one item I'd say on this, if you have an interest in having a marketing analysis, let us know. We'll set you a time and we'll have a phone conversation with you and get that created and have a follow-up call to go through the recommendations. For those of us that are financial advisors or seeking to get our Series 65, or those of us that are looking for how can I build a sustainable practice that may have a sellable value in the future? How can I increase my ongoing monthly revenue, my recurring revenue? And how do I increase my wallet share and expertise trust level with my current clients? You may have interest in picking up your 65 and becoming a financial advisor. If that's the case, IAMS Wealth Management can help you out. We are a annuity-friendly corporate RIA, and IAMS Wealth Management, if you don't have your license and you're looking at getting it, can help you everywhere from what does that involve? How do you open your window for your U10? What materials do you study with? Who do I call for X, Y, Z? In addition to that, if you are looking at coming on board, this can add more money to your pocket. Also, as we mentioned here, because you're going to earn managed money fees, recurring monthly revenue. And oftentimes advisors we see make the transition will increase their fixed revenue on their other side of the business as well. In the transition, we can also set it up to where we can begin to assist you with transitions while you're studying. So you can ask about our Fast Start program with IAMS Wealth Management. Bottom line, if you have an interest in picking up your 65 or maybe reducing your fees from where you're at now, give us a call. Be happy to help. Get you on the phone call with Duncan and our IAMS Wealth Management team. Face-to-face training. We're doing some knowledgeable speaking here on our webinars, but there's nothing beats getting elbow to elbow with others doing what you do in your community. And that goes for all of us on the phone here. Group learning is key. And we brought back our life and annuity academies. They've been going extremely well. We've got one coming up at the end of September that we still have some possible spots on here. If you haven't indicated you have an interest, let your marketer know or go to our website or ask for a link. We can send you the registration link, to get on that approval list so that you can be qualified to attend one of our events in which we cover everything from macro tax planning all the way through keynote speakers from multi-million-dollar presentation or presenters, indexing tools, practice development, and of course, rubbing elbows with everybody. We got to have some fun, right? So for the production that you bring in, we do have a trip. One thing that's different, if you've been with other marketing organizations over the years, most trips or insurance company trips were typically put together on a 12-month qualification period. Ours is on an 18-month, allowing you some extra time to qualify. January 1st of 24 through June 30th of 25 is the qualification period. This trip is going to be in Quebec City, in Quebec, in August 3rd through the 8th, coming up in 2025. 5 million points to attend, comes out to roughly 5 million in annuity premium, or a mix of target life and products in there. And if you have a question about where you stand on the ranking list for that, let us know. Or if you'd like to raise your hand and say, hey, I'd like to attend that, let your marketer, your sales director here at IAMS know, or myself, and would love to know that, so we can get you material and help you keep in the race for your personal objective there, and would love to see you on the trip. In addition to that, we are on social media, as you can imagine. Feel free to link us. If you haven't, go out to LinkedIn. We'd love to have you add us. Same thing with Facebook. Go from there. Without further ado, I'm going to bring on my colleague Kim here, because Kim, we're going to look at not fighting the IRS, but maybe bending the rules a little bit, or actually using their rules to bend when we pay our taxes and to our heirs, right? So I'm going to bring you on and flip the presentation. There you are. That was, let me see if I can get this switched over to you correctly, and we should be cooking here. There we go.
All right, I think I'm getting there.
Perfect. We see your screen. There you go.
Do you see the appropriate one?
Let's see. Yeah, exactly. Yeah. Well, that depends. Now, I see the email you got pulled up, and I think it must be on your other
side
here.
So let's stop that. I got a lot of stuff pulled up, so I apologize.
Oh, no.
All right.
Okay, we're cooking if we get this far.
Yeah.
I believe
I told you
I'm not the same one I do. Oh, that's okay. Yeah, no, I'm not 100% on that. There you go. Now I see your slide presentation.
Perfect. Sorry about that.
You are most welcome.
All right. There's so many different applications out there. It's hard to get to know all of them. But Justin, thanks so much, for this opportunity and being able to present to, many of your, producers and those that you all work with or could potentially work with. I am just going to, go through a couple of strategies that will really bring a lot of value to your business. I know this slide actually just indicates that we're going to talk about a non-qualified stretch, but we're going to go into a couple of different areas. And like Justin said, ways to help our clients be more tax efficient, or even our beneficiaries be more tax efficient. So, before I kind of continue, I don't really have an agenda, but I did want to just, mention to you, like, sometimes people don't know what a non-qualified stretch is. And just basically in a nutshell, as easy and simplistic as I can, relay it, it's basically when someone owns a non-qualified contract, an annuity, and they leave it to a non-spousal beneficiary. So anyone but a spouse. So we're thinking, a friend, a partner, a child, a grandchild. So anyone that is a non-spouse, that beneficiary has more than just one option or two options available to them. So while that client is living, they get that tax-deferred growth, but they sometimes don't think about the taxation later to the beneficiary. So I'm going to just run through real quickly some of the claim options that are available, once a client passes away. So all carriers offer a lump sum or a 5-year deferral. And basically a lump sum, what happens, if we have a lot of gains in that contract? Well, that's going to be taxed immediately. They're going to get their hands on that money immediately, but they're also going to be taxed immediately. Sometimes we can't do anything about a beneficiary, getting the googly eyes like, wow, I could buy a boat with all that money, or an RV, or, a home on the beach. Sometimes we can't get beyond that. But we really have to try to educate them on the best option for their current situation. So a 5-year deferral is very similar to a lump sum, right? It may not be taxed immediately, but you're going to have a short window of time of where you're going to have to pay those taxes back. So might that be a good option for a beneficiary? Well, maybe. It just depends on every situation. Some carriers also offer an annuitization. Annuitization is a better option, right, because it stretches out the tax efficiency over their entire lifetime. But the problem with it is they lose control, they lose flexibility, and they lose liquidity with that. The plus to that is, like I said, it's stretching those taxes over their entire lifetime and applying a part gains, part basis exclusion ratio to the distributions that they'll take. Few carriers might offer what we call a non-qualified stretch, as I described. Oh, my screen's going a little crazy. Sorry about that. Living a life of its own. So the non-qualified stretch allows actually the most flexibility to a beneficiary, much like annuitizing, stretches out, that tax efficiency over their entire lifetime. The non-qualified stretch does the same thing, but you don't lose control of that contract. That beneficiary becomes the new owner of a new annuity contract. We set up, or most carriers, I'm going to assume that most carriers will set up like an automatic type of distribution and get that calculated, for that beneficiary. So it's think of it as a set it and forget it type of concept, where you have to take the distribution a year following death, and it has to happen every single year, as long as you keep it in that annuity and you don't surrender it. But like I said, a non-qualified stretch provides the most tax efficiency because it allows them to stretch it over their entire lifetime, but it also is giving that client control. Control meaning, hey, if my lifestyle changes or something happens in my life where I need my hands on that money or more money, I can do that. When you're annuitizing, you can't do that. So think of a non-qualified stretch as, just the best option that's available. Now, at the bottom of the screen, you'll see that even less carriers will offer a more tax-efficient treatment to these distributions, and that's an exclusion ratio. So much like the annuitization, part gains, part basis type of calculation, that is the treatment that is going to be applied without, so it's annuitization, it's annuitization treatment without actually being annuitized, and you're only going to get that with Integrity Life. So the exclusion ratio translates to a much lower 1099 for your clients, and we're going to go through an example with that here in 1 second. But before we do that, we're going to go through this quick scenario. It won't take very long. Let's see. Let's just assume we have a client that recently passed away. She has this old annuity contract that she's held for many years, and with about $600,000 current value, half of that being basis, okay? So half of that is gains. Her beneficiary is her daughter, and the goal for this money is actually to leave it to the daughter. Well, earlier in the year, or even last year, the client, got dazzled by, all of the great interest rates that we have and had at that time, not really giving much thought to the features that she might need or how that might impact her beneficiary when she passes away. So fast forward, now this client has passed away and the beneficiary is presented the non-qualified stretch. Now I'm going to back up. I'm assuming that you as a producer or any of us as the advisor, the producer that worked with this client, I'm going to assume that there is an established relationship with this beneficiary throughout this time period. Most of the time there is not an established relationship. And so that makes that job of getting that beneficiary in to talk to you as an advisor to help to hold on to those assets in your book of business. It makes that job much harder if you don't have that established relationship. So this bullet here just kind of assumes that relationship is already established, and they had no difficulty calling you up and saying, hey, I want to talk to you about, some of the options with this non-qualified contract that your mom left you. So we move forward. We present the non-qualified stretch strategy to the daughter, Tanya. Tanya sees the complete value and tax efficiency that this type of strategy and concept will give to her versus paying the taxes on the gains immediately or soon, right, with a lump sum or a 5-year deferral. So We go through the roles and the processes of completing the claim forms over at the other carrier. We complete the new application. It's submitted. Then what happens? Some of you may know, they learned that the carrier where that money sits, where Tammy has this money, they will not allow that to move. That means that they're only going to offer Tanya a lump sum, a 5-year deferral, and maybe an annuitization. They are not going to let this beneficiary stretch this money away from that carrier, or what I call, in layman's terms, trying to make it easy, because a lot of carriers don't know what a stretch is either. When you call their service or sales desk, it's a post-death 1035 exchange. If they do not allow a post-death 1035 exchange, what is that going to do to Tanya? Look at her tax bracket. She's very successful. She might be, gosh, what's the highest? A cardiologist. They have to make a lot of money, right? 37% tax bracket. Can she afford to pay 37% on $300,000 of gains immediately? That's just something really, really hard to swallow. And, and now you've wasted a little bit of time. You maybe have lost a little bit of credibility with this beneficiary. So we want to make sure that that does not ever happen to you. And I want you to, next time, maybe when you're working with a beneficiary, or maybe working with a client today that says, hey, I've got this non-qualified contract. Maybe you call them. I've got this non-qualified contract. What are your plans with it? Let's do a review. Do you still plan on leaving this as to your beneficiary? Yeah, nothing's changed. Okay, well, today, this is the new scenario, right? Okay, great. Let's explore what's available at carrier XYZ to Tanya, your beneficiary, after you pass away. And we'll coach, like we do a very good job of coaching you through the actual questions that you have to ask. It's not that simplistic. There's about 3 or 4 questions on how I like to phrase it, and we'll coach you on these 4 things that you need to ask. But if this carrier is only going to say, nope, the only options at claim time is a lump sum or the 5-year deferral, maybe annuitization, then maybe it's time to consider moving it to a new carrier that can provide you with all the options, or the beneficiary with all the options. You can move it today while the client is alive before it's too late. And we're stuck back in this situation, right, where Tanya only has the lump sum or the 5-year deferral to choose from. So the idea is to think about, working with that client today to move it to a carrier that can provide all 4 options to that beneficiary while you still can. So you would get paid on that case actually today. And then I'm going to talk a little bit about how you want to build that relationship with that beneficiary so you get paid on another case later. But back to bullet number 3. So, you talked about the stretch option. The client decided to move it because there is tax efficient lifetime distributions to that beneficiary. So we're moving forward with moving it to a carrier that's going to provide all 4 options. Why do I want you to consider Integrity Life? Because we are going to provide that annuitization treatment to those distributions, which is going to provide more tax efficiency to the beneficiary. All right, so up on the top right of the screen, here's our premium, right, with basis, half of that being basis. So we have 3 options here. We have our lump sum with an immediate taxation on the $300,000. So that's scenario number 1. We have scenario number 2. The arrow on the left is pointing to a distribution of almost $20,000. It represents the $20,000 distribution with all carriers, right? So that's the annual distribution of the first year following death. So that's going to represent just that payout for all carriers. So we can consider a $20,000 1099 in that situation in a stretch with any carrier that will allow it. But with Integrity Life, how about if I cut that taxable amount in half to only $10,000? So Mr. and Mrs. Beneficiary, or
you can
Mr.
say
and
that
Mrs.
again,
Client,
Kim. Let's back that up. Cut that in half
Yes.
again. There you go. I love that. Go ahead.
Cut it in half. So yes. So Mr. and Mrs. Client or beneficiary, would you rather pay taxes on $20,000 or would you rather pay taxes on half of that and just over $10,000? Well, if I'm in that situation, I want to pay as little taxes as I can, right? So this is kind of the reason why you might want to consider, moving that client's non-qualified contract today while they're still living, and you still have this option to guarantee the stretch option later. And then with us, we're going to provide even more tax efficiency if you move it to us. And I'm going to tell you why it's really important to lock in that legacy business. I'm sure you all already know this, but there is $68 trillion set to pass to future generations in the next 20 years. And statistics here on the screen show that once one of the, we'll just say a widower, once, the husband passes away, the wife is left, or vice versa. Typically, the surviving spouse will actually leave that advisor. There's 80% of them will leave that advisor after their spouse passes away. Of those that stay, once it's passed to the children and both of the parents are gone, 20% of them will only stay. So, do that math. These are assets that you could typically hang on to if you just do a little bit of education and coaching up front, right? So how I would kind of tie in this relationship and start building this relationship with the beneficiary is once that policy is delivered to you, call that client back in and say, hey, I got your policy. Let's review this. But I want you to bring in your beneficiary too. I want them to know what we did for you and for them later. So you're kind of building that relationship. You can show them an illustration. Oh, by the way, did I tell you we can illustrate the non-qualified stretch as well as the exclusion ratio. You don't have to do any dirty math. I just had somebody tell me yesterday afternoon, oh man, that's great. I was doing dirty math and I knew it wasn't going to be, exact. Well, I can give you that illustration. You don't have to do all of that work. We'll do it for you. Share that illustration with that beneficiary. Then once they leave that office, make sure that client is reinforcing that conversation and why you did this for both of them, so that when your client does pass away, that beneficiary is going to remember that, and you can bring out that illustration again, or you can requote it, and just share that kind of concept with them again. So just to kind of refresh, here's just a couple of reasons why you would want to consider Integrity Life. Of course, number one, we're going to provide that exclusion ratio to beneficiaries, giving more tax efficiency. Part gains, part basis calculation on those distributions that have to take place. The IRS wants their money. You can move it now or later, but we say, why wait? Move the funds with low cost basis now with a plan and a guarantee to have that stretch option available to the beneficiaries later. And then, of course, you get paid now when you move that contract with that older client. And then, you're setting up that legacy business to guarantee that you're going to get paid later on that stretch, on that younger life in a new contract. That's a second commission to you. And then the advantage, I already kind of touched on it, that we illustrate these stretches. You don't have to know all these nuances. I already told you that we'll coach you. We've got questions. We've got things to say. We'll make sure that you don't go through this whole rigmarole of, pitching this and going through the to find out that you can't do it. So kind of where we sit and how we can help you, any of the team there at IAMS, any of you that are on the line, we are more than willing to help you. And then these are the resources that we have available to IAMS, to you as producers, as well as we have some client-friendly pieces as well. That's my pretty face up there. This is one of our fun marketing pieces that we do. Actually, we have one of these for our entire sales team. I mean, we don't have a huge sales team, but it's been a little fun. They allow us to have a little bit of fun every now and then. But this is available, and I'll get one over to Justin so he can have that on hand in case any of you might want that.
That's excellent, Kim. I can pass that out to everybody.
Awesome. And all of these pieces that you're kind of seeing snapshots of, they'll all be within that kit. And these solutions that are available, we have all solutions available for clients today. We are a little bit limited on the beneficiary options, but we have 2 FIAs, we have a traditional fixed, and we have an immediate annuity if that beneficiary would like to take, income over their entire lifetime. And then with that, my only ask on the stretch before we move into inherited IRAs, which I won't take too much time on that, is, before you just want to quote, the best possible rate, just take a step back and ask, a few more questions. What other features are you looking for? Hey, is this leave-on money? If it's leave-on money, what's the cost basis? Have you thought about how this might impact your daughter, your son, when you pass away? Let's talk about it. So this is a great piece that we just have available, and it's kind of a reminder. And if you all have your own teams that do any kind of outbound marketing, that's there too. There's an outbound question. All right. So let's just chat a little bit about shifting gears. Sorry, I'm going to take a little quick drink. Shifting gears to inherited IRAs. I'm going to ask how much confusion there is, to what you can and can't do. I still get emailed and called on a daily basis. Hey, do you take inherited IRAs? Well, yes, but what's the situation look like? So, right? Do you get that too, Justin?
Oh, I was going to say, yeah, on a regular basis, colleagues of mine have been doing this 25 years with me, even as IMO, professionals. Yeah, I mean, it's the IRS's job to make this stuff very detailed, and happy you're here to help us.
Yeah, they definitely do not make it easy. So basically, there's just a couple of things that I would need and Justin would need and his team would need if you're working with a beneficiary that just happened to inherit an IRA. We need to know the date of death for the deceased, their date of birth, and we need to know the beneficiary situation. Like, who is the beneficiary? Is it a spouse? Well, they likely can just continue that contract, right? In most cases. If they're a non-spouse, how old are they? What's their date of birth? Because if they're older, they have all the options available to them. They can stretch this contract and the taxation over their entire lifetime, much like the non-qualified stretch we just talked about. They can stretch that over their entire lifetime and take those RMDs as long as they keep that contract open. They can also stretch and choose from any of our products. They can also stretch if they are no more than 10 years younger than that deceased. So older and no more than 10 years. If they are more than 10 years younger and they are a non-spouse, that's where the limitations come into play. And they have only 10 years in order to take all of that money out. Now, with Integrity Life, we only have one option available, and because we want to make sure that our clients and those beneficiaries are sticking to the rules, we're sticking to the rules. We only have our immediate annuity available, and that distribution would have to take place on an annual basis. That would not extend out beyond 10 years from, would not extend to 12/31. How am I going to say that? It cannot extend beyond 12/31 and 10 years after death. So it has to be distributed within 10 years of death by December 31st. Doesn't matter the date of death in that situation. So that's the 10-year rule. Now, if that beneficiary is more than 10 years younger, like we just talked about, and they're limited to the 10-year rule, one more question, or kind of two more questions you need to ask. Hey, do you happen to be chronically ill, or are you disabled, per IRS stipulations or definition? If they are, then they fall back into the bucket of being an eligible designated beneficiary, and they can stretch over their entire lifetime. That's a lot, right? That's a lot. So we have another piece that would help you both on the non-qualified side and the IRA side, and it's showing right here up here on the screen. Now, this is going to be pretty specific to kind of what Integrity Life has to offer, but you'll kind of get the gist of the general rules. This one here is it actually has steps 6 through 10 on the second page, which would help you out as well. So I'll make sure those are available to you, Justin, as well. And then just a couple of minutes, I want to switch gears again, and I'm going to tell you about a strategy that you're going to love. You don't have to work very hard for it. It's probably in your book of business already, and you just need to look for clients that have IRA money. They don't have to be within RMD age. Maybe they're approaching RMD age, but they do not want to take that RMD. They come in and they complain about taking that RMD every single time, every single year. Is there any way I don't have to take it? Well, now they can at least peel off, up to $200,000 into a QLAC. And the rules are much easier today. So if you have never heard of a QLAC, it's because years ago, the limits were lower. There was a second rule, 25% of plan rule, plus a max amount. Well, they've taken away that one rule. And so we have a max amount of $200,000 that a client can take out of their IRA money, like take out of that pool, set it aside into this qualified longevity annuity contract using a deferred income annuity. But they set it aside and they can defer that RMD on the $200,000 as well as taxes on that $200,000 up to age 85. That then will reduce the RMDs, that need to be taken today, right? Because we've reduced it by $200,000. Now, you can only do this in a deferred income annuity. There is no other product that allows you to do it. So we are seeing so many of these QLACs come through. It's just amazing. And I'm going to show you kind of the tax savings here on this graph. This is one of our case studies that we have available. And if you look at the graphs on the second image to the right, in the blue, it's funny, it's the same situation, $600,000 with no QLAC, okay? So it's all our IRA money. At age 73, this client has to start taking the RMDs. So RMDs by the age of 85 total over $400,000 with $130,000 in taxes. A lot. Now let's just peel off $200,000 and put it into a QLAC. Now it leaves us with $400,000 in IRA money. By age 85, I'm taking a total of about, we'll say $274,000 in RMDs, and I'm only paying $88,000 in taxes. Quite a significant amount in tax savings there. So that is kind of the importance of, how you can use a QLAC into your business. Again, it's already there. My little tagline, and I don't know if you've heard this from me, Justin, give me 9 minutes and I'll show you how to make $9,000.
I have not, but I'm intrigued. I like it. Go ahead.
And that conversation really, it doesn't take 9 minutes, but the $9,000 comes from the commission that we pay on street level on any deferred income annuity. It doesn't matter if it's a QLAC or whatever it is, we pay 4.5% street on that. So it's pretty attractive, and it's been really successful.
Yeah, that's arguably 150 to 200 basis points, if not more, higher than the other three carriers, one of which is captive that I'm aware of out there. You guys definitely pay the higher on the comp, and surprisingly, when you run the rates, and I say surprisingly not because of your integrity, no pun intended, but you guys have oftentimes the higher payout anyway, for the client. Many times.
Right. Well, yeah. And a lot of times, when you're talking with a client and you're thinking of an FIA with a GLWB rider, sometimes the DIA can actually beat that income. So it's something to just kind of think about. And it pays a decent comp as well. I will say that, I did not mention, for those that do not know Integrity Life and kind of our parent company, Western and Southern Financial Group, that you see, all over these marketing pieces in these slides. So Western and Southern is my parent company here in Cincinnati, Ohio. And if you don't know anything about us, we've been around since 1888. We're a mutually held company. We have a Comdex rating of 96 out of 100, and we're A+ rated as well. Our asset to, what's I can see what I want to say. Our
liability
asset ratio, yes, thank you, is more than double of our partners or our peers in the industry. So we are a very strong company. When we're talking about, these types of strategies that last over a lifetime, I think it's super important to really take a look at the stability of a carrier. And then, last, I just want to let you know, we haven't talked about this a lot, Justin, but we do a lot of entity business, And, what's an entity? So there's several of them listed here on the page, but C Corps, LLCs, partnerships, charities, associations, clubs. The weirdest one I ever got was a sportsman club. Homeowners associations. They can own annuities.
Nice. Yeah.
Yeah, it's really, really cool. And then, of course, all kinds of trusts. The one thing that we can allow, if you all work with, maybe small business owners with qualified plans, you're looking for some growth and you want to give maybe an employee a benefit, that plan can own one of our FIA products. You can add a GLWB rider to it. And with that key employee, when it's time for them to separate from service, and provide them that benefit, you can change the ownership, and that GLWB contract sticks and stays, and they can flip on that income and get that benefit whenever they want. So it's something that's a little niche-y. I think we're an outlier, and we do see a lot of that business as well. And then, full lineup, SPIA, DIA, fixed. I'll tell you about one other product, and it's called Multivantage. We issue through age 89. By the way, none of our products ever charge back upon death except one that we won't go into that today, but we never charge back upon death. Multivantage is a fantastic MIGA that will issue through age 89, so up to the 90th birthday. And it's a true rate to term MIGA, a 4, 5, 7, and 10-year option. But what I love about this product, other than, its older issue ages, at the end of the 4, 5, 7, or 10-year term, we do not auto relock. They can sit there liquid, earning the guaranteed minimum of $275, or they can surrender it, or they can try to move it, or the best option, they can relock at new money rates with just a letter of instruction, no application, no suitability review, and we'll pay full comp on that. And we have commissionable opportunities for relock through age 96.
No, I'm sorry, I keep cutting you off, but that's a lot to swallow. So full comp with a letter,
yep.
And you're not trying to undercut them and pull the rate away, and you don't have to deal with this window stuff. And
right,
get it set up. That's great news.
Yeah. So we have places where we fit. These are the ones that I pointed out. This is where we fit the best. And I'm hoping that, you guys, some of you that are on the phone have taken some of this away and can utilize it in your business. So with that, Justin, I'll let you do your wonderful close that you always do, and help these people that are on the phones.
Oh, thank you so much, Kim, for your time. I put a couple points, as always. I could probably go on for longer. Doing this as long as I have, for the better or worse, all of us have taken those calls, and I know we have in the room here, where you've met with a client where the non-qualified stretch or their understanding of this QLAC or what have you, was done incorrectly, or as Kim mentioned earlier, you get all the way up to the point of distribution and you find out, oh wow, my options are limited and I'm pretty much cut out of the client's whole entire situation. It doesn't have to be that way. At Western Southern, you guys have been great in taking those calls. Don't hesitate to give us a call. We'll get you on the phone, or calls directly to Kim's team. I'll provide that number in the email I send out. Um, I find that you guys have an opportunity at Integrity to earn the case, and our agents appreciate the guidance, and that's one of the biggest reasons I've used Integrity over the last, 24 years with that, because if it has longevity tied to it, like I believe retirement income should, these products and the rules change, and having a good grasp on that is important to have a good team to be able to ask those questions. So thank you. You also mentioned don't work. What was it? Don't work too hard. It's in your own backyard. And that was a really good strategy, or a one-liner that right now, it seems like, 5 years ago, all of us heard the word replacement. We were looking for the compliance guy in the room, or gal. At the end of the day, it's going against a fiduciary obligation to not explore reviewing your current existing annuity owners' contracts. Many of those, and here's a perfect reason, what we just talked about, which was tax efficiency, tax distribution, what happens when this annuity comes to fruition and you pass away. That's a part of the strategy that's not always looked at. Right now, a lot of people are looking at the better rate, or the income that they can get, which is a huge benefit. The advisor gets a commission, but also these benefits of the non-qualified stretch could be a huge one. And now you have a resource with Integrity. So if you are not already working in your book of business, let us know. If we've done business with you in the past, I'm prepared to be able to send you a complete list to include details like your policy number and everything of all your policies written. If you don't already have those in one place, it can make it easier to go through those contracts. And my team and I are more than willing to explore reviewing those with you if someone is, as an example, would like to explore this option with the non-qualified stretch, or maybe even just get a better income product or better interest rate before these rates change. So I'm going to go through a couple questions here. Appreciate everybody's attendance. This will help us get you what you need here, and nothing that you don't. So first of all, I'm going to post this here on the screen. Our first polling question: contracting with Integrity Life. Those of you that would like us to have my licensing team send out a link to just approve your connection with Integrity Life and IAMS, then I can get out to you all the material that we didn't cover today, which is, in addition to it, the annuity review kit as it relates to reviewing your existing contracts. That's an IAMS piece. And then also, of course, everything from Integrity. And really, I've found there's some strong companies out there, but I would keep Integrity in your back pocket for sure. Older ages, non-qualified stretch, anything to do with taxation. You guys are great resources, so that'd be a good one to have. And we'd be happy to get you set up. Also, I'd say too, your fixed index annuities, Kim, nice. They're priced well for the advisor as well. Compensation-wise, you'd be happy and surprised to know that the commission paid on those is right up there with any of your 10-year FIAs too. And I appreciate everybody collecting those. And I'm going to close that one. Thank you. And we're going to go with the next one here. In reference to our upcoming training academies, for those of you that maybe, I mentioned earlier to reach out to your marketer, but if you would rather have us just send you the registration link to make sure you're on that list of when we do begin to make the selection, and we do that in partnership with the carriers that help us with some of those events, that we get you on there. Would love to have you out doing a lot more of these in our office, since, believe it or not, COVID was just around the corner when we had the shutdown. But for those of you that may be with us that haven't been out to our office for a while in Nebraska, love to have you out, but more importantly, to get you in front of other producers, because idea sharing like this is where these things come from. So we'll get you all set up. I appreciate it. And the other one, this general question I always ask, but today we can get specific. Do you have a current client scenario that this reminded you of today? If you do, put it down. We'll give you a call. We'll go through be happy to help with the case. But also, if it's specific to, hey, I'd like to take Kim up on her offer and let's do a non-qualified, illustration, we can definitely help with that too. So if you've got a case where that would be great and you'd like to walk through the process, be happy to help you out with that and get you introduced to the material and the process here. So let us know. And We'll likely reach out to your connection here at IAMS or myself just to gather more information about your client, and then we'll get you a full proposal, walk you through the whole process. So really appreciate everybody's time, and happy hunting out there. And this will be a recorded version here up on our YouTube site probably by the end of today. Kim, thank you again for all your time and support here, and we appreciate the partnership.
Yep. Thank you, Justin.
You're welcome. Have
Have
a great
day,
everyone. Take care. Thank you.